Good morning, everybody. Could I warmly welcome you to this briefing session for civil society and universities. And we're really fortunate to have the opportunity to get a briefing on an important new paper from the investor group on climate change, on empowering communities, how investors can support an equitable transition to net zero. My name's Don Henry from the Melbourne Sustainable Society Institute at University of Melbourne. And I'm working closely, and I also want to acknowledge the new Melbourne Climate Futures led by Professor Jackie Peel at the University of Melbourne. Could I first do an acknowledgement to country? I'm on Wurundjeri land, and many of us are going to be on different people's country in different parts of Australia. And I want to acknowledge the traditional owners of the lands we're on, and acknowledge their elders past, present and future, and acknowledge the lands have not been ceded. It's a great pleasure to be helping today with this briefing session. I'd love to just make a couple of introductory comments, if you'd allow me, before we jump into the session. Firstly, I want to acknowledge the really important role of the finance sector in action to tackle climate change. And as we're all watching the journey into the Glasgow climate negotiations, anyone watching the race to zero or some of the other platforms where governments and private sector and others are lodging commitments already, you can see the momentum within a very big piece of the finance sector to be pushing in behind the Paris Agreement goals and for strong action on climate change. So I want to acknowledge and thank the sector for the profoundly important role that it's playing. And in that spirit, I want to acknowledge the really important role the investor group on climate change has played, plays, and will play. It's a fabulous organisation. It's as strong as its membership, of course, but the group has released really important papers, is active in discussions in Australia and in this region and other parts of the world. So I want to thank the investor group on climate change for the fabulous work that it does. And I want to really thank all of its team for the fabulous work they do. Second thing I just wanted to say quickly is I also want to acknowledge the role of civil society as a profound part of change in our societies, often underestimated, but the role civil society and universities play with ideas, education, engagement, advocacy, and being engines of change in our society is really, really important. And in that spirit, what the investor group on climate change has asked is if I could help with a briefing, particularly reaching out to civil society and the academic sector. And that's our purpose today. There have been and will be other briefings done for the business sector and government sectors. Finally, the issue of transition and ensuring an equitable or just transition and an effective transition is really, really important in the climate debates and more widely. And it's not necessarily an easy issue. In Australia, I don't think we have always been very good at supporting communities and people and workers when change is going on, wherever it's driven from. Sometimes this has fallen into what used to be called industrial policy, but we've got pretty much, at best, a mishmash of approaches around the country. So I think it's really refreshing and important that the finance sector and the IGCC has been having a serious look at this issue. And I know it's profoundly important to civil society groups and to researchers and to others, and obviously to community. So in that context, let's start in on the briefing. Could I just seek just a little bit of assistance? We're first going to have a briefing from Amy from IGCC, and then we're going to go into a panel format. We're really fortunate to have some great panelists with us. It's going to be easiest for questions if you're comfortable popping them into the chat function. And many of us will know each other, so I'm sure we'll keep that personal. I'm going to do my best to keep an eye on that chat function, and with our panelists, we'll then try and honour the questions and insights coming through. But I'd love to encourage your participation if that's okay. Thank you so much for joining us, by the way. Let's start off, and I'd like to bring in Amy Quilton from the Investor Group on Climate Change. Thank you so much, Amy.
Thanks so much, Don, and thank you to the Melbourne Sustainable Society Institute for hosting today. And hi everyone, it's really great to be here with you. I'm also joining from Wurundjeri country, where we're having quite a nice sunny start to spring here in Melbourne. So I'm going to aim to keep this formal part of the report overview brief, and really welcome you to take notes of areas that come up of interest that you're keen to discuss further through the Q&A session. In this work, there are really three key themes that we sought to explore and examine. Firstly, looking at the current state of play in the global energy transformation towards clean energy, recognizing that this is moving very quickly, along with climate and energy policy and the broader financial sector landscape in this context as well. And recognizing the pace of change and the transition underway, which communities in Australia are potentially most exposed to adverse impacts associated with the transition. We know, of course, that this transition will bring abundant opportunity and is overwhelmingly positive. It's also recognizing that there could be, although there will be, without a planned response, also disruption with some communities more disrupted than others. And then finally, really building on recent work that's been done internationally in Australia to further explore and bring to life really what is the role of investors in supporting a just transition for fair and decent work in the new economy, transition of workers and communities for a just transition. And we know there is a long way to go and there's still a lot to do. And so in this context, we hope that this work really provides a valuable contribution to that conversation, as well as supporting action in the real world. Briefly, it's really important to acknowledge that this work was made possible with support from Aware Super, CBUS, HESTA, and IFN investors, all IGCC members. We also convened a great stakeholder reference group across industries, civil society focus, academia, unions, investors, including renewable energy experts and others. And this was a really important part of this process, both in terms of engagement and expertise and input into the report. And finally, to acknowledge this work was conducted largely with analysis and research into the energy sector and detailed community analysis by the Climate Change and Sustainability team at EY. A bit of background on the investor group on climate change. For context, IGCC is a collaboration of Australian and New Zealand institutional investors, so including superannuation funds, for example, and fund managers, and supporting service providers on the impact of climate change, focused on the impact of climate change on investments. IGCC has existed for over 15 years now, and in that time we've really seen climate change shift from a niche investor theme to a very well-recognised mainstream investment issue. IGCC now has about 86 members across the investment industry. And we work across a range of areas, particularly corporate engagement, engaging with companies, and we're joined by Laura on the Director of Corporate Engagement and Climate Action 100+ on the panel today from our team. And policy and advocacy is another key pillar of our work. So in understanding where investors are coming from in this issue, it's worth acknowledging climate change is a financial risk. So investors see climate change as presenting material risks to investment returns, and particularly many of our members in the superannuation industry, pension funds, have a long-term view, and so they're looking at this long-term risk and opportunities so that, for their underlying members. And this is also being increasingly recognised in Australia and internationally from central banks, regulators, that actually this is now a legal obligation to address these risks and opportunities. And if we keep in mind that most superannuation holders will receive their savings around 2050, where we know the world will look very different, it's an important milestone for achieving Paris objectives. This is really helping to frame the way investors are thinking about climate change and really are getting behind the benefits of implementing the Paris Agreement. And briefly to acknowledge that these impacts of climate change, as this group well knows, they're far-reaching, expected to or will affect the entire economy. And in that sense, it's not easy for investors to diversify away from or divest from the inherent risks of climate change. And we know that action today affects the long-term trajectory of climate impacts. And increasingly, this is why we're seeing increasing proactive engagement on climate change from investors, including in the policy and advocacy space, setting net zero targets and portfolio transition pathways to act on climate change. Within this context, there's increasing global recognition that the social considerations and impacts of climate change are incredibly important consideration and something that investors need to take account of. And this was reflected most recently in our annual survey results that came out a couple of weeks ago, which show more than ever, investors, over 70%, are already considering social issues, 90% actively considering how they will integrate these social issues particularly related to decarbonisation, and that's the focus today, into their investment practices. And just to clarify what we're talking about with just transition, because it is a broad concept, and we certainly haven't covered all aspects of just transition in this work, but here we're really talking about combining the need for climate action with the consideration of social inclusion through an economy-wide process, which aligns a sustainable future with the creation of decent and fair work, quality jobs, net zero emissions, and thriving communities. So I hope that helps to set the scene and really welcome further discussion. A really interesting part of this work was in understanding the role of investors, also looking at where this sits within the broader context, and really identifying that everybody has an important role to play in this. I think a key theme that came through is collaboration is really essential. In looking at what investors can do, on the right-hand side here, the framework uses a framework. This is also how investors are thinking about climate change as well, in these themes of investment strategy, capital allocation, corporate engagement, advocacy and partnerships, disclosure, and then as well, how are we measuring and evaluating the impact outcomes from this? And I'll go more into that soon. But importantly, this overlaps very closely, intersects with the important role of government in this, which we'll unpack a bit further as well. Clearly important role of companies, which is potentially where investors can have the biggest influence. Unions obviously driving this work and a crucial part in the just transition conversation. Local communities, everybody here today. And we've put investors and financiers just to highlight the slight difference there, to note that when we're talking about investors today, we're not including banks in that. Banks have a crucial role, and I know some in this group have done specific work on banks. Banks in some ways will be at the front line with providing finance for small business individuals, and have a really important role in just transition. And it's an important and distinct role from the institutional investors that we're focused on today. So just to highlight that part of this work was looking at what investors can do and recognizing, yes, there's a really a lot of value and benefit in investors taking a proactive role in examining and responding to just transition considerations to support communities. And was also part of this was exploring the limitations and what is not the role of investors as well. So moving on to the energy state of play, I really encourage those energy nerds among us to delve further into this. There's some really interesting and valuable findings and analysis in the report, which I won't dwell on today because I know that this group is well across the sort of necessity and also largely inevitability of this transition, which is underway. I will highlight a couple of key points. Firstly, that we can see that the domestic clean energy transition is well underway and rapidly increasing. But secondly, now over 70% of our key trading partners have set net zero targets. So that includes China, Japan, Korea, and others. And so increasingly we're seeing this transition is both necessary and inevitable. And on this global demand side is very much were largely outside of our control, and what is it within our control is how we respond to it and prepare for it. So this leads us to, what does this mean for impacted communities? And we really looked at which communities are most likely to be exposed and disrupted, with particularly those with the largest workforces in fossil fuel-based sectors. And so this led us to looking at the Hunter Valley, the Wrapup Basin, which you can see on the map there is a large section of Queensland. And we've got the Pilbara region, Western Australia, and Gippsland, and the Latrobe Valley down in Victoria. And we recognise that the Latrobe Valley is in some ways further ahead in its journey, having already experienced significant mine and power station closures. And we really learned a lot from the work of the Latrobe Valley Authority in this process. These graphs here, the purpose of them is to show some of the differences in local residents versus fly-in, fly-out workers. And it's showing that the different demographics as well as the fuel types. So we can see an interesting difference where in Wrapup Basin, Hunter Valley and Gippsland, we have mostly local residents, whereas Pilbara is predominantly fly-in, fly-out. And that creates a different dynamic and risk profile for both workers and communities. We can also see on the black here that which shows thermal coal that that shows coal, including met coal, is most dominant in Hunter Valley and Wrapup Basin, with thermal coal likely to transition first, with demand to decline most quickly. That particularly leaves the Hunter Valley with the more urgent need to respond and diversify, but with all regions needing to respond over different timeframes over the next 10 to 30 years. Obviously with sort of proactive planning needed as soon as possible. So just diving a bit deeper into the differences between the communities. This work, I think, was really illuminated the need to take a place-based analysis. And this was again drawing on the work of the Latrobe Valley Authority and their approach to the importance of understanding gaps and natural advantages within regions, including around the region itself, as well as the education levels and socio-economic factors. And so I won't go into these, but really just to show that there are key differences that can help us in formulating really place-based, bottom-up responses. And I think, an important message that I certainly took away from this, from the conversations and this research, was that to be effective, it's really important that we ground this transition in these transition opportunities that we're focused on in people and communities. Very briefly, we did look at different implications of different transition scenarios. I thought it was really interesting to see that looking at the orderly immediate transition, which happens with immediate action from now through to 2040, versus delayed action starting later in 2030, still aiming for net zero in 2050, we see there are a number of benefits of starting early, including less disruption overall for workforces. Yes, we need to start sooner, but it's actually there's actually benefits in starting sooner and having a less economic and social disruption required for a steeper transition later. moving on to the role of investors. Here, before we go into what can investors practically do and some of the key recommendations out of the report, just pausing to recognise some of the limitations and challenges that we discussed, some of which, all of which are surmountable in different ways, but not all of which investors can address on their own. Focusing on the top three here, scale of opportunity and achieving the right risk return profiles are key for large institutional investors. And policy uncertainty remains a really significant barrier for investment in the opportunities that we know are available and coming and necessary for both the net zero transition and also supporting a just transition. And just to highlight that from our recent survey that I mentioned earlier, policy uncertainty for 5 years in a row has been one of the top barriers, but this year has jumped up even higher. So this is a whole list of different perceived barriers to climate-aligned investment. You can see here that policy uncertainty ranks the highest, followed by achieving the right risk return profiles. Again, very briefly, before we move on to Q&A, we can unpack some of these ideas and themes further. There are a number of areas where investors can play an important role in supporting a just transition. Some of this is a natural extension of work already underway, or very largely it is. But in some cases, it does require new ways of thinking and mindset shifts as well. So I won't draw on everything, but I think particularly interesting, the three areas of investment: strategy, capital allocation, corporate engagement, and advocacy and partnerships. On the capital allocation section, an investment strategy, this theme again that came through around local context analysis, I thought was really interesting and was a recommendation in the report for investors to actually engage early with community stakeholders and look at local context when assessing investment opportunities in these communities in transition. Also on corporate engagement, Laura, I'm sure will speak to this a lot further, but it's an area where investors and engaging with companies can really make a difference in encouraging companies to consider these just transition considerations and to embed them in transition plans. And finally, advocacy and partnerships, so much potential and need as well, particularly private sector and government coordination and partnerships around financing, blended finance, as well as private sector, community and government together as well. And one area where we know that would help to address some of the risk profile and other issues is on the ground work around due diligence. And we know that universities, community groups, and others can play a really important role in helping to coordinate some of that stakeholder engagement and due diligence as well. So to wrap up, investors have a really important role and certainly can't take a back seat in this issue. But we know that they're not the be all and end all, of course, and that there is, and that while this work takes a step towards informing investor practice and outlining some tangible actions for investors, as well as setting the scene that helps with our policy and advocacy engagement and broader conversations, there's still a lot of work to do. And this is just one part of that. And we really recognise the role and the need of all stakeholders to play a part in this, with collaboration, innovation, and grounding this work in people and communities as really crucial. Thanks.
Amy, thank you so much for that great presentation across a really detailed report. What I'd like to do is bring our panelists straight into the discussion, if I may, Amy. And could I just encourage all friends and colleagues on this call to pop any questions into the chat. That's going to be the most efficient way to do this. Thank you very much. Let me introduce our panelists, and then I'll ask each to just spend 1 or 2 minutes with your own remarks on the report to lead us into some discussion. With pleasure, could I introduce as well from IGCC, Laura Hills, the Director of Corporate Engagement. Great to have you with us, Laura. Thank you. Also, could I introduce Chris Newton, the Executive Director, Responsible Investment, IFM Investors. Chris, thanks so much for coming along. And then also, with pleasure, Mark Wakeham, who's Climate, Energy and Just Transition from the Australian Council of Trade Unions. Mark, wonderful to have you here, and I acknowledge your former outstanding work with Environment Victoria. Panelists, thank you so much. Maybe could I invite Laura to lead off with some remarks?
Sure, thanks Don, and thanks for having me along to speak. Firstly, we'd just like to acknowledge the traditional owners of the land that I'm on today, which is the Ngunnawal people here in Canberra. So I guess just to kick off a couple of initial comments, the first thing that I would say is there has been a lot of work done on just transition in the past, both sort of from a company perspective and from an investor perspective. And this was an update of a report that IGCC issued in 2018. But the thing that I think was really unique about this report is I think it's the first time I've seen anywhere the level of detail that we went into for this report, or that Amy and the team went into, in particular looking at specific communities and how those communities would be affected. Because I really think for this issue, that's where the rubber hits the road. And it's not just about looking at individuals, that's obviously critically important, and looking at communities, but it's also, as Amy said in her comments, looking at the overall transition plan. We do this a lot when we're talking to companies at an asset level, because we sort of, we're talking to an oil and gas company and sort of saying, well, you're not going to be doing this in 2050, so what will you be doing? And what does that transition look like? What are the assets that you have? Who are the people that you have? And where is the kind of logical place for you to go in this kind of net zero world that we will presumably be in by around 2050. And so I thought it was really great in this report just to see that happen at that community level and really think about where those jobs might be for those people in those communities. So I really think if there's one part of the report that you spend some time really digging into, that I think is the real highlight for me. And then the only other comment that I wanted to add was just a couple of comments on the corporate engagement outcomes. So the work that I do at IGCC focuses on getting investors who have shares in companies, that particularly those that are quite carbon intensive and have really significant climate risks and opportunities that they're facing, getting investors together with those companies and basically talking it out on how are we going to address these issues, what are the expectations of investors, and how are companies positioned to meet those expectations. And it's a really lengthy, ongoing dialogue. The conversations can be tricky at times, and it's really, you have to be pretty patient to kind of see, incremental outcomes over time, and sometimes things happen really quickly as well. So it's basically a journey that you go on with companies. But the report really offers a couple of really, I would say, quite concrete actions that companies can take, which again, I think is really significant because it's a question that comes up a lot from companies. They sort of say, well, we know just transition is important to investors, but we're not entirely sure what we need to do right now, particularly if the asset is going to be transitioned in 10, 20, 15, whatever years. So what can we do now? And I think that the report did a great job of mapping out those specific, particularly on the governance side and the disclosure side, some of those really specific things companies can be doing now to really start to prepare. And then the last thing that I will add, Amy mentioned in her comments the issue of investors divesting and how that can be unhelpful in terms of just transition. It's a critical point, but the other point that I would like to really emphasize, and it's because we're seeing it a lot at the moment, is companies divesting assets can also be really problematic. And I think in terms of where this conversation is going to go next with companies and investors, this is going to be a really critical issue, because we're seeing companies start to try and get rid of their fossil fuel assets. And sometimes that means the exit of an entire community. And sometimes it means they're passing those assets on to companies that are less well placed to help those communities transition. So I think that's going to be a really important issue, particularly over the next 5 years.
Laura, thank you so much. Let me invite Chris in now, please.
Thank you very much. Thanks very much, Don. I'm joining everyone today from Whadjuk Noongar country here in Perth, Western Australia. Oh. Unfortunately, it's very wet and wild outside, so I can't enjoy a lovely spring day that it sounds like Melbourne's having as well. Look, thank you so much. I feel very humbled to be obviously on this call and actually share some of our insights from an investor perspective. Laura made some really recent comments there around the role of investors and what we can do, role of companies and what they can do. And partly our role in this fair and equitable just transition as well. I think that's a really important word, that it's fair as well, is really important to the overall part. You'll see in the report there's a number of, and Amy went through a number of aspects that we can do. I break it down. I'm a bit simpler in my mind. Maybe that's a sign of my lack of intelligence. I'm not sure. But we can allocate capital. We can avoid towards renewable energies, rare earth minerals, hydrogen, the future, and so on. Technologies for transition, etc. We can avoid the issue. Not allocate capital. We can act, which is what we're talking about, corporate engagement and so on. And importantly, advocate for systemic change. So I have the 4 A's. It's a little bit easier for me to remember, being a bit simple. But I think one aspect that's really important, and the report will pick this up, is we have a fiduciary duty to act on this. And as IFM and as many super funds across the country, we're universal owners. You'll hear this phrase, and that means that if one part of the economy deteriorates or is impacted, it's likely that there's another part that is conversely positive or negative as well. So we need to look at the system-wide approach. And that's why this idea of equitable transition is really important, because yes, a mine may close or a resource may depleted and so on, but there will be flow-on impacts across the economy, not just in that local community, but across the wider economy. So thinking about these things now is really important for us, especially when we think, I'm not too far, well, I'd like to think I'm not too far from retirement, but we've got a 50-year time frame for a lot of people who are members of different super funds as well. And a really interesting thing, I really wish we'd had this conversation 5 or 10 years ago, or even longer. And a really live example, and Laura touched on this, is Rio Tinto closing the uranium mine at I think it's Ranger in the NT at Jabiru. And the local, the TLO, the traditional landowners, are actually asking for an extension of rehabilitation. And it's almost a bit too late to be arguing for a lot of these aspects now from an investor perspective. We should have been nailing Rio 10 or 15 years ago, saying, we know you're closing this mine. What are you going to do for the community? What are you going to do for the environment? And so that's why this conversation, I think, is really exciting. It's challenging, but it's a really exciting one to be in the middle of. So I really appreciate the opportunity to hear some questions and learn from others around the table as well, because not one person has all the answers. That's the critical part. I keep learning as well. So thanks, Don. I'll hand back to you. Otherwise, I'll talk all day.
Hey, Chris, thanks so much. Those comments are really welcome. Let me bring in Mark, please.
G'day, Don. G'day, everyone. I'm on Wurundjeri land in Melbourne. I work for the Australian Council of Trade Unions. We're really pleased to be part of this report through the advisory group. And I guess we approach the issue of climate change through a lens of needing climate ambition and a just transition. And so, many of you on the call have a sort of climate justice lens for this work. And that obviously there's a responsibility to make sure that we're taking action on climate change, particularly to protect the most vulnerable, but also to make sure that particular parts of the community aren't bearing a disproportionate burden of the costs of taking action. And for many of workers who are in these industries, this is a sort of existential issue for them. Increasingly, we're seeing companies being pressed not just on their emissions reductions targets, but what is their just transition plan. And I think it's interesting that you kind of expect this to happen in the fossil fuel exposed sectors. And, you know, for a company like AGL or Origin, who holds coal-fired power stations that will be retired in coming years, you would expect that investors and those companies would be having a really sophisticated conversation around, well, what is your plan around the workforce? What are the aspirations of that workforce? You know, it needs to be really carefully tailored to the aspirations of individual workers, whether they want to be redeployed to another power station or they want to get out of the energy industry entirely, and also what's the aspirations of those communities. So there's that rich planning and conversation needs to happen in highly exposed sectors, but increasingly we're seeing this as an issue in other sectors as well. So for instance, you know, the opportunities in renewable energy, for instance, in regions like, you know, the Pilbara or Central Queensland or the Hunter Valley, there are very large opportunities, but we need to also be making sure that these jobs that are coming into the system are good jobs and secure jobs and share many of the benefits of the jobs that they're replacing. And that's a real challenge for unions because we haven't organised in these new industries, and many of the protections and conditions that we've got in, for instance, the coal industry were fought for over, you know, decades by those unions. So you know, increasingly businesses that you might not think need to look at things through a just transition lens, like a Coles or a Woolworths, who are making these big commitments to powering their businesses with renewable energy, also need to be thinking about some of these workforce dimensions. And the final thing I'll say is that we still do need government leadership. It's really great that investors are having these sophisticated conversations with companies, and that there are frameworks that they're using to guide companies through what a good just transition planning looks like. And unions have developed a sort of parallel framework that interacts really well with the IGCC work. But we still need government leadership, particularly for the really hard and expensive and long-term work of diversifying these regional economies. You know, companies can probably do a pretty good job with their workforce. They might be able to provide some new employment opportunities in other industries or businesses in the region. But when you're looking at replacing entire industries in places like the Hunter Valley or the Pilbara or the Latrobe Valley, we do need government at the table and with serious investment there as well.
Mark, thanks so much. Great introductory comments by our panellists. Thanks. I'm going to try and move straight into assisting with the Q&A. Panellists, we've got a first question came in from Ben Neville. I want to acknowledge Ben is Deputy Director of the new Melbourne Climate Futures at the University of Melbourne. And a good question from Ben that, Chris, you've already touched on, but Ben's asking, what role responsibility do you see for investors in the advocacy arena, advocating for policy change by governments? Chris, maybe you could tee off on that because you did raise it.
Sure. Sorry, I was always there. Struggle with the mute. To me, I think one of the greatest things, and we've got to look at it through an investment lens. I get that. I mean, there's a personal lens here as well because there's so many Australians and globally people impacted by this. But for us, let's use that Rio Tinto mine as an example. What happened? Rio are huge, but what happens if the government all of a sudden imposes a cost impost onto Rio to rehabilitate over a 26-year period? That's value destructive for us as an investor, right? If you just the pure numbers. So our role for advocacy is actually should be around government. Please put in better regulation, better policies and frameworks that prepare and give companies certainty so they can prepare and make the financial adjustments accordingly in their balance sheet and account for fair and equitable transition around climate or mine closure or whatever it might be. So to me, that's actually in our genuine interest, and I think will advance the system. There'll be other ways, of course, but that's the first thought that comes into mind. I think we need to step up a little bit around that, which is a difficult conversation considering the other significant policy challenges that Australia has around climate change, but one idea that should be offered.
Chris, thanks. Would any other panelists like to toss in on that question? Could I take the prerogative here and just acknowledge, building on what Chris said, there's an interesting example of how you bridge across different interests of civil society and business to influence government together. And that is, I'm aware, I was involved with this, the Australian Conservation Foundation more than a decade ago was looking at the issue of how do you mainstream finance into a clean economy, renewables, energy efficiency and the like. And rather than just trying to come up with the answer ourselves, we reached out to the financial sector and together worked up the idea for the Clean Energy Finance Corporation. And there was a little bit of serendipity in the politics that got it up, which one always needs. But it was interesting how effective a conversation was between civil society and the finance sector in that case, and how effective our joint advocacy could be. I think there was a lot of learning all around, and that's a case where there's a policy tool buying down the risk of disaggregated investment opportunities, investment risk and policy risk. And we're probably all fortunate that it seems to have worked well and that it's ended up having support across the political spectrum, which is a bit unusual in Australia, but I suspect the collaboration across civil society and the finance sector help build a strong foundation. I'll just toss that in as an example. Others will have other examples. Let me go to another question. Warwick Jordan's come in from the Hunter. I want to acknowledge Warwick does wonderful work across communities there and trying to build the support for equitable transition in that region. Warwick's asking this: does the panel have any advice on how to organise in regions so that regions can meet what investors are looking for? And he's making the point, and Amy, you made this point in delivering on the report, place-based work is really important, but it's challenging when one's talking about the finance sector and investment. So would anyone be able to share some insights with Warwick from the Hunter Jobs Alliance? Would any panelists like to take that on?
Yeah, thanks, Don. I'm happy to start and invite others to obviously add. Thanks, Warwick, for your question. Yes, and I think it really goes both ways. So I'd like to just acknowledge that, again, that important work that that local groups are already doing, and that investors can also learn from as well. So building those networks and collaborations are really critical. Those key areas, I suppose, around scale, due diligence, and scale, due diligence, and getting that risk return profile right, I think, as well as understanding the local gaps and natural advantages, are all areas where stakeholders on the ground can really help. So, for example, around building together some of those relationships and identifying those gaps that that can then investors can help to understand, and sorry, it's taking a step back, that can then inform investors' understanding of the region itself. And around scale, I think to Don's point, that role of civil society in engaging with government to get the policies in place, along with investors also sharing their perspective with government, to recognise that those underlying policies that can help to create those larger renewable energy zones or industrial hubs that can get the scales that investors need, is another area of really important focus. So I jumped around a bit there, but I'm happy to elaborate further.
Amy, thank you. Mark, would you have comments there?
Look, I'm probably reflecting on the previous question a little bit. Just two brief reflections on the influence that investors can have both on government and companies. I mean, I think one of the things this report does really well is highlight that delayed action actually means more disruption and more chaotic change and a much faster rate of change. And I think that's something that, unfortunately, we haven't won that argument in sort of the Australian public debate. We get government scaremongering about, well, ambitious action actually means that the economy will tank now. Whereas what we know, of course, is that the earlier we take action, the greater the benefits, but also the less disruptive the change. So I think investors can be really powerful in being a sober voice arguing for ambition. And then the second point I'd make just around influence of investors on companies. I mean, Chris is right. You know, sometimes these influence conversations have to happen really early. And it's interesting to see, you know, Warwick and Hunter Valley, you'd have seen the change in rhetoric from Rio Tinto around Tomago aluminium smelter, that, you know, up until very recently, there was no possible way that could have been powered by renewable energy if you talk to the operator of that aluminium smelter. And yet I think that pressure on Rio Tinto over time and the bottom-up pressure that's been coming from the Hunter Valley community has now the CEO of the aluminium smelter talking about it being operated by renewable energy by 2029. It's a bit of a vague commitment, and I'd like to see it sort of buckled down and made a reality. But it's the pressure, particularly from community and investors coming both ways, can really change company attitudes and investments materially. And in doing so, actually give the smelter a lifeline into the future, because of course, without that decision to be powering the smelter with renewable energy, we're going to lose those jobs, because the world's not going to want carbon intensive aluminium in the next decade or two.
Mark, thanks. Thank you so much. Let me pop a question in. The place-based side of things that we've just been talking to is really challenging, and Amy, I'm thankful you've acknowledged Karen Kane on the participants here, because the Latrobe Valley Authority is quite an interesting example where there has been government funding and policy to set a platform that's enabling community engagement and discussion and enabling different interest groups to come together. So I just wonder, would any of the panelists have more thought on how to help the place-based settings to work? And I suppose this is particularly from the finance sector, just to pop that question in there. And Chris, would I be rude if I went straight to you? Was that curly one?
I used to have curly hair, not these days. But look, it is really hard. I've been thinking. I had the fortunate honour of working in the Victorian government for a good part of a decade there, so I'm sort of quite familiar with some of the challenges locally. It is really hard because when you look at the major institutions, this idea of place-based employment, yes, it's very important. I don't think you'd ever get some sort of resistance to it because it probably makes more economic sense these days with remote working, if you're an office-based worker, etc. Where the challenge genuinely is, and let's not hide behind it, is actually the scale and the size. So if someone like an Australian super, I shouldn't speak on their behalf, someone who like IFM, who, you know, has, it sounds funny, I'm going to sound like one of those old supermodels that say they don't get out of bed unless they're earning a certain amount of money. But the reality is the big funds like ourselves and others, it's hard to look at a very small regional solution because the capital might be smaller compared to where they can deploy it elsewhere. So I'm giving myself that out because that's not the space we play in, but there are lots of boutiques who I think should be thinking about that, because the actual return profile can be huge. And, you know, not only are you getting great staff engagement, if you're investing in there and loyalties and so on, productivity improvements, you know, you're actually contributing to the wider economic growth of the country. Having said that, one way that big institutions can play a role is actually start asking the questions about managing people. So if an AGL, or I'm using them as the example, they were very helpful in this report, as were BHP, in terms of how are they structuring their workforce? Are they actually considering regional deployment when they are looking at restructuring their entire workforce across it? So there's some simple little things that we can start the conversation with to get them to be thinking, actually, this is a concern for investors. And I think, you know, like the switch from call centres globally back into regional areas, things like that are things that we should start be pushing as investors to think about at least, and they make the case. Sorry, Don.
No, Chris, that's great. I've got half an eye on time. We've got a question here from Dan from the Lord Mayor's Charitable Fund, and I actually want to acknowledge the fund's wonderful work in supporting change across Australian society. Dan's really asking the trends we're currently seeing towards a clean economy. Are we confident they're going to keep going, or is there going to be a correction there? And it's probably a good question in relation to what we're talking about today, transitions, the investor community, where often the longer term view is required. I might take this as an opportunity for last question around our panel, and just also invite, if the panelists had any just concluding comment they'd like to make, as well as that question, that'd be really welcome. Laura, may I ask you just to tee off, if that's okay?
Yeah, sure. In terms of, I guess, some wrap-up comments, probably I'd like to address just one of the questions that came through in the Q&A, actually, which was from Jacqueline Peel, which was just about this issue of directors and their responsibility for dealing with this issue, if that's okay. I just think it's quite a topical issue at the moment. So what I'd say to that question is that I think that there's been a couple of pieces of work that have progressed this issue, mostly the Hutley opinion and also some of the guidance that's come from ASIC, which has made it really quite clear, I'd say, that directors are responsible for managing climate risk and doing that in a very comprehensive sort of way. The other thing that I think is quite clear, just based on directors' duties, is that they need to balance in their minds the focus between short-termism and long-termism. As we know, in Australia, CEOs rarely stay in their job for more than a couple of years. They're very short-term sort of positions, whereas board members are often in the role for up to 12 years. So what you would expect based on their legal obligations is that the directors would be the ones really looking to the horizon. And I think if you assume that the current state of play with Australian big carbon intensive companies is reflective of how directors are dispatching those duties, I would say that there's quite a few problems there. There seems to be a real focus on short-term decision making over that long-term view, and so that's a really critical issue. One of the things that we've been digging into a bit at IGCC is looking at whether that reflects a lack of diversity of thought and opinion and background and expertise and skill sets on those boards, what you find is there is a very small pool of directors who end up on many of these boards, and many of them have very strong backgrounds in the fossil fuel industry. So we're really looking at whether there's opportunity for additional capacity, and this could be climate change expertise, it could be expertise in looking at things like change management, transformation, innovation, research and development. It could also be skill sets in understanding community engagement, which particularly for this issue would be really very helpful. So that's a real keen issue of focus for us. And just final comment, observation, I think this is an incredible report, and I think it's helpful beyond simply looking at the issue for investors. I think it's quite helpful in terms of broader stakeholders engaging with this issue. But this conversation is by no means over yet. There's a lot more work that needs to happen in this space. And as Chris said, it would have been good if we were doing this 10 years ago. We're doing it now. But there's going to be a lot more that's going to need to happen in the next sort of 5 to 10 years. So yeah, looking forward to participating and further conversations with everyone here.
Laura, thanks so much. Mark, could I invite some brief concluding comments from yourself?
Yeah, sure. Look, I'll go to Dan's question around, ongoing profitability of these clean energy industries. I mean, obviously there's going to be huge demand as we decarbonise and these sectors are going to grow. I guess there's a concern, if you look at Australia's outlook, there's a real concern that the pipeline for new renewable energy projects is drying up quite dramatically as the federal renewable energy target has been fully subscribed. And you're now relying on either state drivers or corporate power purchase agreements for new projects. And we've seen that the rate of build is actually really declining, or at least the rate of financial close of new projects is dropping dramatically. Clean Energy Council released some data on that recently. And I think it gives us an opportunity to think about this energy transition and the fact that, you do have state governments driving it, such as the Victorian government with its renewable energy target or the Queensland government with CleanCo. It gives us the opportunity to actually build in some settings that create secure jobs, that ensure we're getting benefits from manufacturing, procurement, supply chains, and that we're not fully exposing any new renewable energy projects to a very difficult market to make money in. I mean, any electricity generators, coal, gas, or renewables are really struggling to turn a profit at the moment. And therefore, we need to be thinking about how does this industry operate sustainably over the long term, both in terms of financial return, but also in terms of creating good jobs and linking those jobs right across the economy so that we're actually getting some of the benefits of the manufacturing in Australia as well as the servicing and the maintenance. So yeah, a bit of an aside, but I think we can sometimes get carried away with a very positive view of the growth rate of renewable energy. I actually think the industry in Australia is in a very fragile place at the moment. And one of the things it needs to do is build a workforce that seriously backs it. Like you see coal miners backing their industry in regional electorates, for instance.
Mark, thanks so much for those insightful comments. Chris, some brief comments from yourself?
Yeah, look, I know it's the end. Thank you ever so much for everyone. I'll just pick up on Laura's comment actually, because I think that's actually a potential way forward, is that directors' duties. How can we expand them to be beyond just have you assessed the risk and are you mitigating it for their own company? Actually, how about we extend that to the wider community and put some emphasis on that, because change does start from the top. But yeah, it's a great idea, Laura. I think we should take it forward.
Chris, thank you so much. Amy, some last comments from you to wrap us up, and then I'll conclude if that's okay.
Yes, thanks, Don, and thanks everyone for your questions and participation and work as well. To the question and as a closing comment as well, these trends will continue over the longer term and accelerate. And something that we didn't touch on so much is that we are still really advocating for and see the need for, as with many in this group, that the long-term detailed climate change strategy for Australia. We need the strong 2030 targets, keeping the pressure on in the lead up to COP, and and the 2050 target as well. These are really critical signals for investors. And if we can pair that with this strong focus on people, communities, and place-based considerations and how we address these policies and strategies, that's the best way that we can have an effective, just transition. And so that work around the climate policy is still crucial, and it's recognizing that we have these conversations now and pair it with community transformation plans to make sure we have inclusive, prosperous communities going forward.
Amy, thanks so much. That's really good of you. Could everyone join with me in thanking the panel? The sound of one hand clapping, but thank you so much. It's really nicely done. Could I thank all our participants? And I'm sorry we haven't been able to deal with all the questions. I can see a good one in there from Kelly Court, but I'm sure Amy, IGCC, or any of the panelists would welcome any online emails or discussion. And once again, I think it's just great to have an opportunity to get a good briefing and to do some thinking together across universities and civil society. It's deeply appreciated. I just want to acknowledge the wonderful efforts from our team at the Melbourne Sustainable Society Institute, Tracy, Kennedy and Katrina, who've helped a Luddite steer through this session. And I just want to thank the IGCC for the opportunity to both assist on your reference panel and to assist with the briefing session here. So thank you very much, everybody. Go forth and change the world.